Let's welcome Himanshu Srivastava from Morningstar. Hi Himanshu, this is Siddharth here. Good to have you on ET now. We are talking about flows, and one of the marquee names of our stock market is saying that so far our markets have not seen any major flows, but there is a tsunami of flows which are waiting by to get into our markets. What's your take on that?
Right. Well, if you see, the couple of months have been really, some of them like August and September have been trouble one when we have seen a lot of outflows from FIIs. But at the same time, when I'm looking at some other data within the FII segment, that is the offshore funds that I normally track. In those months, the offshore India-focused offshore funds continue to witness net inflows compared to India-focused ETFs, which were actually negative in terms of flows. So I think what I agree with them, with the person who has made that statement, is I think the money that is moving out is largely the profit booking, given India has provided a good profit booking opportunity to investors, and two, I think the long-term money has not been moving out to that extent as a short-term money. Now, if we have seen in the recent times how the flows have moved, it's largely event-oriented. So if there is a negative event, you have seen a lot of flows moving out of the country. If there are positive events, positive news coming in, which we have seen in the recent times, so I think a lot of money has started coming into the Indian equity markets. But at the same time, when you see the long-term money that normally flows in, there have been a consistent flow irrespective of what the news is coming and what the news is going out, largely because from the long-term perspective, there is no denying the fact that India holds a good investment proposition to FII investors. So I think whether there a lot of money is waiting to enter India, I'm not sure. I have not really tracked that thing. But at the same time, I think some money going out of the country is not really a negative thing, and that is why I'm not really concerned about, even if we see some amount of money moving out in the short term, because in the long term, what I'm seeing is the long term money is moving into the Indian markets.
Other avenues of making money in domestic market has really gone down. Real estate is not doing well. FD is giving you very less returns, and after demonetization, we are seeing the saving pattern of retail HNIs have changed, and a lot of money via mutual funds is coming into our market now. On this backdrop, do you feel that the significance of FI's money has been drastically reducing day by day? I mean to say, the influence of FI's money is reducing on our markets?
Yeah, and that is a positive thing that I'm noticing this year. If you see, largely if you go back 2 or 3 years back, whenever FII invest money, the market used to move up. Whenever FII used to move out of the Indian markets, the market used to fall. But what we have seen this year, despite FII moving out of the markets, the Indian markets were stable and moving up, largely because a lot of domestic money is coming into the Indian equity markets. I think the less reliance on FII is normally largely because, or it is preferable largely because it makes the country or the market more stable. FII money is largely, most of the FII money which is short term in nature, distort the current market equation, and that is something which is undesirable largely for the investor segment, or normally short or not that big investors who invest in markets to gain something, to get some alpha over and above what they are generating, they are able to generate from FDs and all. So I think the less reliance on FII is positive, and that is sort of countered by our DI investments, which we have seen quite healthy this year so far. So yeah, I totally agree. Means I think gradually the idea should be to have more dependence on our in-house money rather than money coming from foreign lands. But at the same time, even if foreign money is for a long-term perspective, that is still good.
Right. Himanshu, one last question. You track ETF very closely, and these days it is not just index ETF. There are a lot of thematic ETFs which are there and which are India based. Where exactly you are seeing more inflows coming into our markets? Which theme FIs are preferring at this point of time, or it's a broader market they are preferring?
Right. As of now, what I've seen is it's a broader market. So even in ETFs, across ETFs, I'm seeing net outflows for the last 3-4 months. But on the same time, when I look at India-Focused Fund category, there have been largely there have been inflows. There are few funds which obviously will witness outflows, but at the same time that could be related to their performance as well. If I see which segment of the market they are investing in, that is largely the assets are coming into financial services and basic material sector. Basic material sector has actually gained more prominence this year, largely because there have been a turnaround in the commodity cycle and the stocks within this sector are doing well. But at the same time, healthcare and technology, which used to be a good amount in their portfolio, good exposure until 1 year back, have seen dramatic shift in terms of they have been trimming exposure. Again, that is understandable largely because of the global headwinds that these sectors are facing. I think the trimming of exposure is happening there. Barring that, the overall portfolio on a broad-based perspective is largely directed towards economic growth and consumption uptake in urban consumption demand. That is what their portfolio is directed towards, and this is the positioning that they have been maintaining for the last 3 years. I have not seen that change except for these shifts which are happening in the healthcare and technology sector, which is largely a top-down kind of overview that we can get from them.
Thanks a lot, Himanshu, for throwing light on what FIs are doing in our markets and how their flows are changing.